All right, we see folks joining in now. Thanks for coming in today. We got about a few minutes before we formally get started. I want to give everyone a chance to log in since we just started the broadcast. This is Royalty Exchange Investor Office Hours. I'll keep an eye on the participants as they join, and we'll get started once I think we have a quorum, so to speak. So bear with us just one moment. Hello, Rod. Thanks for using the chat feature. Okay, we're going to go ahead and get ourselves started here, just because we ran quite a bit over last time and I want to maximize the time as much as possible. So my name is Anthony Bruno. I'm Director of Communications here at Royalty Exchange. Panelist here from Royalty Exchange is also Ryan O'Connor, our financial analyst, and of course our CEO, Matt Smith.
Howdy.
Say hello, guys. Yep. Everyone's audio is working and whatnot. So this is our second office hours session, and we've been sort of making this up as we go along in terms of precisely how we handle this in a format perspective. And what we're going to do this time is we're going to just jump right into everyone's questions right off the bat, because there are plenty, and we want to make sure we address all of them. And so many of you had submitted questions in advance, and we are going to start just by reading those off for the questions that you submitted during the registration process, so we can kind of get through those. And then once we're done, or even as we're going through those, if you like, I'm going to try something a little bit different, and I can't guarantee I'm going to do it properly, so please bear with us. But what I'm going to try to do is there's a feature at the bottom of your screen in Zoom that allows you to raise your hand. And when you do that, I'm going to try to see if I can find you in our list of participants, and then I can allow you to actually ask your question live via audio to us directly, so we can hear your question and you can hear us answer, and kind of try to make it a little bit more interactive that way. So we're going to start with that first. If you'd rather just type in a question via the Q&A and not be on audio, that's perfectly fine too. So both are totally acceptable. And so I see some people are already submitting questions via the Q&A as it is. So when I sort of prompt you to say, hey, if anyone has a question on that, please raise your hand. We'll try to use that feature, and I'll try to allow you to come into the audio feed, and hopefully that works. I think that would be a little more of a natural open hours type of format. So we're going to give it a shot. But until then, let's see here. We're going to go ahead and just start with the questions that were submitted. So, and I'm going to read them, and then the guys here are going to provide the answers best we can. So on the last call, actually, there was a question that we had some follow-up after the call that I wanted to address with first. And it came down to an investor who was asking why he couldn't see what percentage of overall ownership share the songwriter had in the song or catalog being offered. So right now we just know that this particular slice earns this much, and so on and so on. He was asking how come he couldn't see this is 5% of whatever the 100% ownership share was, and that sort of thing. And at the time, well, I'll just leave it with that. So Matt, why don't you start with the way you answered that, and we kind of go from there.
Yeah, I said it was irrelevant, and I think that it was irrelevant from the context that I was describing, and I just want to be a little bit more clear about that. Most of the royalties that are sold on the Royalty Exchange platform are all passive interests, meaning that the person who currently owns it doesn't have any ability to really exploit it. That's being done by another entity, by the publisher typically. So with those rights, the songwriter doesn't really have any particular position other than being able to collect the income that comes from it. And so in that case, it didn't matter to have the majority of it to be able to just sort of dictate how the rights might be exploited in the future. So that was the main thinking. But there's a couple of other things I think are also important too. And that is that a lot of the catalogs of a songwriter, they could have dozens or, more than 100 songs in a catalog. Now, technically, each one of those different works can have a different ownership structure, meaning in one song, they might have, worked with 2 co-writers in producing it. So they have a third of that. And another one, they might have worked with, 6. Another one, they might work with 2. So every single work can have a slightly different ownership structure. And, for the most part, because they're passive interests, again, it doesn't really affect you as an investor buying them. You're basically you're buying the cash flows that are represented within each auction. So whether it's 5% of the cash flows from that song, or if it's a 75% of the cash flows from that particular song, all of the cash flows are represented within that auction. Are those the ones that are being sold? Does that make sense?
I think it makes sense to me. Was there? We're going to go ahead and try this live. I don't see the person who asked the question in the audience here, which I thought he was going to be on. He said he would, but if anyone has any other questions on that, you can raise your hand or chat or type in a question. But until then, we're gonna move on to the next one. Then, thank you for clarifying that. I was certainly curious about that myself. Okay, so next question basically is there's a couple of questions around once I own the song, what can I do with it? So we're going to kind of group those together now. So the first one is, can I use a sub-publisher?
Well, I mean, most of the times when you use a sub-publisher, you'd use them to collect the international royalties. And in most cases, when in our auctions, when it's a publishing deal, where we exclude those international performance royalties from the auctions and from the transactions. Just because simply there's some counterparty risk, meaning that the original seller could actually set up a deal with a sub-publisher. So because they could do that and sort of undermine the claim on those royalties by the new investor, we exclude them typically from any of the auctions that we do. So for the most part, they're just not part of it at all. I mean, we don't, it's not useful simply because the royalties that are being collected often exclude the part that the sub-publisher is particularly helpful at collecting.
Okay. And Brian, I saw a note here also that there was another member of our company who's not on the call right now that also noted that basically the point of a sub-publisher is to collect international royalties, which we tend to not include in auctions that are on the publishing side of the royalties. So there's also worth noting that. So anyway, once I acquire a catalog, can I market the catalog?
Usually not, because most of the time you're not buying, you're buying passive interests. So basically, in order for it to be, one of the things, a lot of catalogs, they get used in something called syncs. And what that is when maybe it gets used in a movie or used in a television commercial, and that can really produce some big sort of one-time income for the catalog. And it can also help increase the music's popularity because as it gets, put back into the market again. The decisions to make that, whether or not a sync goes through or not, is done at the publisher level. So what we're selling is songwriter positions, and those songwriter positions, they don't have the right to be able to make those decisions. I mean, it's made at the publisher level. So really, I mean, not to say you don't have any authority to sign any deals around the licensing of it when you're buying one of the songwriter passive interests. But of course, you're more than welcome to listen to as much of the music that you buy as possible, and encourage your friends to do that, and that would theoretically have some impact on earnings, although it would be very, very small. You just don't have the contractual rights to license out the music when you buy a passive interest from a songwriter.
Fair enough. And then just to quickly go back to the last question someone typed in here, they weren't really sure. We mentioned the term sub-publisher. Maybe we can quickly define what that is.
Well, basically, a publisher has the right to, the right to license out the work and the right to collect royalties on behalf of the writer and themselves. And a sub-publisher essentially is a specialty publisher that really is going to focus on the collection of a particular subset of royalties. Most often, we see that in the collection of international royalties. And, so it's very few of the transactions we have ever done involve a sub-publisher at all.
Exactly. It is very rare. So I hope that answered the question. Um, let's see here. So there's a couple questions that go back to, can we buy part of a royalty, or can we invest in royalties as a group conglomerate and things like that? I'll start by saying, no, these are one buyer, one seller transactions. We don't have, and we can get, and there's actually a question that refers to part of what we're about to say here as well. But basically, we don't sell like shares in a royalty, for instance, necessarily, because that involves a lot of SEC regulation and would be a far more complicated and expensive proposition. So I'll start by saying that we do that. But in terms of the group conglomerate, I don't know, Mag, is there anything do we know of anyone who like sort of separately creates their own conglomerates and then buys as an entity with us? Or is there anything we can?
I mean, we know that some people buy through funds or entities. We know that people have done that. We don't know really the nature of the structure of their royalties for the most part, or of their capital structure. And we pretty much stay out of it. But
Right.
we know that some people, have used through hedge funds and things, have bought some in the past. So, but basically the way we see these is that while you could technically just be buying a small share of the total royalties generated by a particular work, so you are buying a share essentially, but you're not buying a share in the sense that you think of like Apple stock. It's not divided into uniform pieces and then sold syndicated to a number of different investors. All of the things that are sold on the royalty exchange platform are assets, and they are sold between from one buyer to one seller. And, the transaction is actually, the legal transaction, it actually occurs between you, if you're an investor, and the actual artist seller. So there's no other party involved in that.
I want to bring this up because there's also a question which relates to the syndicated deals that we've provided in the past. The question is, do you expect to provide more of those? And has the economic situation affected that at all?
So we have in the past done 3 syndicated deals. So these are what I just said, that we don't, everything on the royalty exchange platform is not this way. But in fact, years ago, we did do 3 deals like this. We did one for a portion of the M&M catalog. We did some for the publishing for Cage the Elephant, an alternative rock band. And then we did some for the sound recording related to Dire Straits. And those were larger catalogs that we did. We had to go through a process with the SEC to make the offering available to accredited investors only. And those were very successful. And I think that, people did like that, but for the most part, the costs of actually doing those transactions substantially reduces the returns that investors experience in doing them. So opportunistically, if we have a right deal in front of us that we think would be really best, the investors and the seller would be best served by going with an approach like that again, we would definitely consider it. But it's not part of our overall plan, simply because it's slow for the seller, and it really reduces the returns overall for the investors.
All right, thank you. Hope that answers your question. All right, moving on. We have a couple of newbie questions, but first-timer questions here.
Yeah,
and I use newbie because that's how they define themselves, not disparaged by any means. But say, as a first-time investor, what's the most important piece of advice you can give me before I invest in music royalties?
Well, the most important thing is that you should watch a lot of transactions that actually occur on the platform before you even think about investing in it yourself. You can, any live auction, I would just register to watch it, watch the way the bidding works. You can go back through the, past auctions and look at the history, look at what the catalog consisted of, look at how old the catalog was. This is one of the critical details to understand, like how likely the income is to continue into the future. Look at how old it is, and look at how investors have essentially valued it in the past. So there's lots of financial information about these catalogs that's on our site that you can see and dig through, and you can also see how investors have valued them historically. So I would really, really get a strong feel of how the market actually works and how these assets are valued by investors, compared to one another before you place a single bid. I think that's first and foremost.
Yeah, and just to elaborate a little bit, with just, again, your basic investing, your price discipline, keeping your emotions in check, and with royalties in particular, don't get caught up in the artist, and don't get caught up in the song specifically, if it's a new song that's just came out, that's kind of where we see a lot of investors tend to stray away from their discipline that they've set.
Great. So a couple more questions, little slices on the same thing. I would be a first-time buyer. How do I manage my investment to ensure optimal return?
Well, I mean, the great thing about these assets is that, as I start off with, they're passive. So all you have to do is you have to, collect the checks, or, set up the initial direct deposit information, and they get transferred into your account on a quarterly basis most often. Sometimes it's twice a year. Most often, though, it's quarterly. And we act as a like accounting administrator in the middle of these transactions post sale, and monitor the payments and transfer them to you. We don't charge a fee for it. We don't make anything off of providing this service. It just makes it easier for people who buy, especially if you buy several of these catalogs and you have lots of different, payments that might be coming in for different catalogs, to be able to make sure that one isn't being missed and all of that, and make sure they get routed properly. So really, the passive nature of them is one of the most appealing things. It always was to me, is that you buy it and it starts generating income right away, because these have a track record of income already, and payments come in quarterly most often.
All right. And then last in that sort of, well, actually a few more. One is like, how do we provide downside in an investment like this?
How do you protect your downside? Probably is the question, I'm guessing.
Yes.
Yeah. Well, I mean, I think the most important things is understanding risks as best as possible. That if you understand the risk, then you can protect your downside much better. So some of the basic investing fundamentals that Ryan already talked about is price discipline. I think that's first and foremost with any investment. Position sizing, depending upon how much your overall portfolio is, that's going to affect how much you're willing to allocate, how much you should be allocating maybe to music royalties. And of course, with your personal situation, it's totally different. And then in addition to that, you have among how much you plan to allocate toward music royalties, how much is any single royalty stream you buy, and because if you want to put $100,000 into music royalties and you only buy one, then obviously that one needs to be you need to be more thoughtful in it versus buying 10. So those basic things apply to any investment, though. Now with music royalties, I think there's a couple things that you should know just to be able to understand the asset a little bit better. And one is that the biggest one is a kind of a measure of the quality of earnings. And it's a very simple method that we use, really. And it's based upon this thing called the Lindy law, or the Lindy effect, which simply is that the longer that something has been earning, the more likely it's going to earn into the future. So if something has been earning, like the Dire Straits catalog, it's been earning for 35 years, it's likely it's going to be earning for 35. It's more likely to be earning 35 years from now than something that's only been earning for 5 years. So the longer you go back in what we call dollar age for the catalog, the more likely those earnings the quality of those earnings is going to remain intact. So I think that's one of the single biggest things you can do. If you buy new music, it's inherently more risky, simply because you're subject to the current tastes and trends. Whereas music that people are still pulling up on Spotify and listening to Dire Straits, and they've been disbanded for 35 years, something like that. So
yeah, and just understanding the kind of the song age curve, right? So when the song first comes out, in the first 3 quarters, you're going to see rapid increases as it, is played on the radio, gets more popular. And then you start to see a rapid decline until about, between 2 and 3 years. And after 3 years, you'll start to see that level off. So you want to keep that in mind. Compare the dollar age to what you're buying and where it is in that kind of that curve.
Great, thank you. And last question in the sort of the new investor area is, what would you tell a novice in terms of assessing investments and research tools and or sites for the industry as a whole? I might jump in real quick just on
Yeah,
sort of
please do.
the sites. So that's kind of one of the things that I do is I'm always constantly looking around what's going on within the music business. What are the trends affecting the music business and whatnot, kind of drawing on my reporter background a little bit. And so the main trades, music industry trades that I think you are worth monitoring are obviously Billboard magazine for one. There's another one rather newer that's done a really great job out of the UK called Music Business Worldwide. That's a fantastic resource. And to a certain extent, even Variety has really stepped up their music coverage. They've brought in some former Billboard editors to kind of take on those roles. So those would be the three that I would start with in terms of just monitoring what's taking place. There's some smaller blogs that are out there as well that kind of drill down a little bit further, but I also think they're a little bit breathless in their coverage to a certain extent in terms of they can kind of create some tempest and teapots and whatnot. So I'm a little bit hedgy on them, but these three are the most solid, I feel. Do you guys want to chime in on any sites that you guys have found helpful? I'm speaking as more of a music industry, veteran, whereas you folks, Brian and Matt, may have some different perspective from more of the investment standpoint.
Ryan, do you have anything to add to that?
I mean, I'll look at the RIAA, which is just the American Sound Recording side of the business, and I just look at they put out data every 6 months on sales, physical downloads, syncs, that sort of thing, and it just gives me an overall trend of kind of what's going on the sound recording side of the business domestically. I believe IFPI does something similar, scanning through those reports as well. They come out, each of these societies as well come out with one once a year, like an annual report, and you can kind of just get an overall view of the industry.
Sure. And so that's the RIAA for U.S. recorded music data and analysis. And then the IFPI is more of the international buy. So that'll show worldwide. And whenever either of them come out with anything, the outlets that I've listed will always report on it every single time. And I'll add one last thing. If you haven't already, check your email settings with Royalty Exchange and ensure that you're receiving our weekly marketplace update. That update usually shows a lot of information about current assets that are available on the site. And at the bottom, I've been including a headlines piece where I basically aggregate anywhere between 3 to 5 stories of the past week that I've been monitoring, that I think, okay, this is helpful data that someone who's interested in music royalty investing should know about, good or bad. Okay, and I'll summarize those there and provide links to the actual stories. So it's one link to our website that aggregates all the stories. You can kind of read a quote, get a sense, click through, read the whole thing. So I'm kind of doing a little bit of that for you as well. So I encourage you to check that out as well.
I will say, I want to add that there are some investment banks that have started to cover the space substantially over the last few years, just because of the growth that's been happening. And Goldman Sachs is one of them, and they have published a number of reports like projecting the growth of the industry. And I find those definitely have been useful. They sounded their predictions seemed bold and really absurd at first, and then they ended up having to continually increase their assessments of the future. So. But I think that perspective does come in handy. The other thing that I think is important to understand is that all of these sources are on the macro. So it's like as if you're investing in the U.S. stock market and you were just getting, you were getting only analysis of like the S&P 500 or something. The different companies within the S&P, or if you're not investing in the S&P as a whole, then you need to understand the specific companies. And I think the best place that we have been able to find is what we built, which is all the data that's available on Royalty Exchange, where you can find how these things are actually, what the actual earnings on a particular catalog are, not the number of plays, not the number of revenue that ends up in labels' hands or anything like that, but the amount of cash that's generated by specific royalty rights, and then how they're valued by an active competitive market.
All right, great, thanks. So there's a couple of questions I want to get to now, both in the live Q&A as well as beforehand, that talks about the types of royalties available on Royalty Exchange. So there's one in the Q&A asking if there's non-music royalties coming up, like perhaps book author royalties. It's reflected in the pre-questions. Do we, or are there other industries with royalties accessible that might be coming up? Can we just speak a little bit to that?
Yeah, I mean, I'm not aware of anything that's currently close to being listed on Royalty Exchange that's in one of the other categories. I mean, we have done film and TV, we have done books, we have done a couple of other unique things, and we're open to doing them. But our primary focus is, of course, music royalties. But and as far as I'm aware, I don't know, Ryan, if there's. I mean, don't name anything specific, obviously,
No,
if there is. But I wonder if you're aware of anything that's currently further along in the funnel.
Yeah, so I mean, there's one book royalty and there's one movie royalty. Again, those tend to be longer life cycles too. For on the sales side, it takes a bit longer for those to kind of for us to come to an agreement with them. So I wouldn't bank on any of those. But there is some interest in the pipeline right now.
Yeah, let me jump on that real quick. That there's two movie and one, and I know, and then one book. And to Ryan's
Okay,
point,
yeah.
the reason that you don't see as many of them is because they're not standard, and each one of those are very customized, unique. We call them deals. Basically, need to work through. There's different parties involved that need to be contacted. That we have to explain what it is that we do. It's very much starting from scratch almost each time. So it takes a far longer period of time, and it's a lot of it's a lot of work for the team, but also just a lot of moving parts. And so that's why you don't see them as often. Whereas with music, it's sort of
standardize it,
rinse, wash, repeat, for the most part, and it kind of comes through a little more.
but that's because we spent about 18 months standardizing
Yes,
what we would do and what we wouldn't do to make it so it was easier for things to move on to the
exactly.
platform.
So within the music realm, though, do we anticipate having more sound recording rights in the future?
Yeah, I think we will. I mean, the reason that we haven't had as many on the sound recording side is because the sound recording royalties are contractual in nature, meaning that like it's the deal that the performing artist has with a label, and they're all different. They're all different. Whereas especially with songwriters, they're statutory in nature, and it's set by the royalty rate is set by the government. The royalties are collected by these not-for-profit entities, ASCAP and BMI, who collect and distribute the royalties on their behalf. And so it's much more simple. There's not extra contract provisions which govern the use and transfer of those royalties on the part of the songwriters. But they do find they always exist, almost always exist on the sound recording side. But I do anticipate more. I mean, we were just yesterday I was speaking with a label about how to make it more broadly available to their artists, and they're interested, especially now that live performance is not available to a lot of these artists. They're looking for other ways to generate cash flows.
So, and quickly on that other note, another question here is: does Royalty Exchange make deals on the artist portion of Sound Exchange earnings? And what about copyright earnings from Sound Exchange? So, very specific to Sound Exchange for a minute.
We have done a couple deals in the past. We don't do them. We haven't done any in a long time because the clearing and transferring of title, working with Sound Exchange to actually ensure that the rights are transferred properly to the owner is a difficult task, especially on the artist level. It's very difficult. They don't like transferring those rights, so you have to create these different workarounds to legally do it. That might be changing over time, but unless we can be sure that clearing and transferring of the rights of the title essentially can be done easily and and protect the investor, then it doesn't make sense for us to do it.
So another question, kind of moving on a little bit, why is there not more volume on the website? Is there a shortage of supply or a shortage of demand?
We've always been supply constrained, not demand constrained. I mean, we've just never had to worry about the investors looking to buy these assets for good returns. The list has been long, but I think on the supply side, it's been harder. I mean, there's been a number of reasons for that, though. One was because it's sort of known. I mean, artists had this idea for a long time that you should never, ever, ever sell your royalties, ever sell them. And so it was considered very taboo, at least, for them to do so. But that, just like it was really taboo for performing artists to do a product endorsement, 20 years ago. But as the culture around that changed, where product endorsements actually show that you're smart and sophisticated as an artist, rather than a sellout, the same thing is occurring with the sale of royalties as well, because because it's just been done by so many high profile artists in the past. So that culture has changed over time. And I think that's really helped. The other thing is that, now that we're entering this period of financial strain, we have seen an uptick in calls from artists looking to explore this option. So we do expect supply will be easier over time, but it really has been the challenge. There's so much demand and the supply is limited.
And let me just jump in as the communications guy for a second. Also realize that what's on the site are the transactions and the opportunities that we've done a lot of work to vet. There's a lot more demand behind what you're seeing on the website, but for a number of reasons, perhaps some of those can't be made available to investors safely. They may have certain encumbrances, tax liens, things like that. So we're filtering all of that stuff out before it even gets to the site, before you even look at it, which is a protection to you. It's
at least like 10-1 in that regard.
That's actually higher than I would have guessed. That's interesting. Yeah. Okay, great.
And that's only on the auction house side, right? If you jump into the secondary market, there's plenty of listings in there. Those have already been vetted. We've already worked with those. So you can find plenty of assets on that side of the market.
Great. And there's a number of questions around the secondary market and standing orders that I'm going to get to in just a second. So those of you that are asked, we're going to get to that in a minute. But there's one that I really want to get to now that I think is overarching, which is inflation going to kill the earnings on royalties? Have there been any times in history when the cost to stream or use a song has gone up?
Well, yes. In fact, there just was very recently, I guess it was probably 18 months ago, an increase announced of royalty rates collected and paid out to songwriters. And that basically, as I said, it's statutory. It's set by its Copyright Royalty Board. And they announced a pretty substantial increase that was supposed to take effect over 5 years.
44% over 5 years is the ruling. Now that's under appeal at the moment. And it's just the nature of how this licensing works. But yes, that is the case. And that's always happening. There's also been some talk about would streaming services increase their rates to listeners, which would have an effect. And that's something everyone looks at because it's more public, but it's really the back end rates that are more important. Whether Spotify raises their rates and then that has an effect too, but the bigger one is the rate setting behind the scenes that I think you want to be focused on. So,
but because ultimately
it's entirely possible they might raise their rates. I mean, Netflix did. So,
you have to assume that if it's a strong inflationary environment, and Spotify would need to raise its prices in that environment, and they have their contract with the rights holders is that they pay a certain portion of the overall revenue that they create from the use of these licenses, then that would directly translate to increasing the amount that gets paid out to rights holders. So
exactly, I would say that as everyone looks at the streaming environment in terms of where the revenue comes from, the concern currently is on the ad-supported side. And if the ad-supported side suffers enough, the services will have no choice but to try to make up that on the subscription side, I would think. And that could take a number of different forms, but that's generally the area that I would be examining this. This is another great question. When buying royalty streams, are there any reversion rights to the original rights holders that we need to be wary of?
There are situations where that can apply, definitely. But for the most part, that's not the case. Essentially, there is a claim that after a certain number of years, I believe that number is 35 years, that the original rights holder. So if you wrote a song and you license it, you wrote the song and essentially in a deal with a publisher, the publisher has 50% of the royalties that come from that for the composition. After 35 years, and there's a lot of very specific rules about how this works, they can take it back from the publisher, what they've given to the publisher. So, if it is rights that the publisher, for instance, is selling that can be then the original artist can have reverted back to them, then yeah, it could be subject to that. But it's actually and it gets pretty complicated within the law. And I'd rather have our lawyer honestly to answer the question. But when it is subject to it, we do note it on the site. I mean, when we do talk about it, if it's a particular case where it might be subject to that. But for the most part, the royalties that are sold on Royalty Exchange don't apply to that. That doesn't affect them at all.
Right. And it's also the few times that does come up, we've adjusted the term of the deal that on the site to accommodate for that. So for instance, if we see here's an asset that they want to sell forever, but the rights reversion is coming up in 20 years, we'll make that a 20-year term deal rather than a life of rights deal, for instance. So you're essentially evaluating the asset for the 20 years that you'll be able to have it, and go from there, basically. That's been the one case that I know of anyway.
Yep.
All right. One last question, and then we're going to switch over to some of the secondary market questions, basically. But the question is, how do you validate the earnings history of a catalog, and have you ever gotten it wrong?
Well, we validate the earnings of the catalog because essentially the payor or the distributor, we're pulling the financial statements, the account statements, essentially directly from them. So most of the transactions on our platform are songwriter royalties that are collected and distributed by ASCAP or BMI. That's a big portion of what we do. The history of earnings that they maintain for that catalog in their, in the digital files available, at their logins, I think it goes back. How many years does that go back typically, Ryan?
Yeah, it really, I mean, it depends on when they started with them and when they released their music. But I mean, we've seen back to 2001, 2002.
Yeah.
So it certainly goes back far. And I mean, the other thing I would say on that is we have kind of actually served as a check on them. There's plenty of times where our account management team, they're excellent, they have caught mistakes that ASCAP has made, and we have had to report it to ASCAP and BMI. So we check anything we see out of the ordinary. We validate the songwriter names linked to the songs. We validate it within the repertoire in ASCAP and BMI. So, I mean, we do a great job, and I'm not aware of a mistake that we've made.
No, honestly, it's made pretty by focusing on just a few specific slices of the music royalty space. We've really reduced that risk of uncertainty about what's actually happened in the past. So we specifically focus on ASCAP and BMI. We often are not involved in the sound recording side because these things become it becomes way harder to know what's happened in the longer past than it is with ASCAP and BMI and on the publishing side too. So honestly, it's pretty simple. It's pretty simple. We just have earning statements that come from the distributor directly.
So, there's a couple of questions came in as we were answering. Flipping that around, kind of looking forward then, what are the risks of the royalties not being collected or cash flows being missed after I've acquired this asset?
Yeah. Let's see. The risks, essentially, if they're collected and distributed by ASCAP and BMI in particular, which again, most of them are, ASCAP and BMI both have the authority to collect and distribute these on behalf of all the songwriters. And I guess there's risk associated with the original the music user, it's called. So like right now with bars and restaurants that have historically been music users and paid a licensing fee to ASCAP and BMI to be able to play music within their establishment, that you have facilities like that are closed. And then, that does introduce a risk to that income stream that we hadn't seen before. But literally, if you would have asked me this question 4 weeks ago, I would have said that there isn't any reasonable reason one should worry about that at all, especially with these particular royalty streams, because these agencies are set up explicitly for this purpose. You don't have to worry about the songwriter, the artist, writing you a check every quarter. Instead, the funds are redirected from the artist and directed to the new owner of the royalty stream. We often are in the middle of that to collect the royalties, to manage the title transfer, to collect the royalties, and then distribute them to you as the investor. But there have been some new things that have come up with ASCAP recently that have surprised people. And I think it's worth talking about this because we were certainly shocked by it.
Sure. And there's also just two things here. Like one is, can unforeseen events cause there to be less usage of music? Absolutely. Whether it's the current situation that we're in now or the artist in particular, falling out of rapid disfavor due to, how they act and things like that. That's always going to be a risk, and they're never going to get around that. The other side of the question is, what if things that are, if it is being used if the payments are being missed in some fashion. Now, that's sort of your general
Separate issue.
accounting, separate issue, right? So that's more of a logistical thing that may happen, but it's usually made up for in the future. Okay, these are organizations whose sole job it is to track down and get payment. This is what they do. They wake up and they go to sleep only doing this.
Yeah.
And if there's a lawsuit to collect, prior, earnings, or there's a dispute, those will happen. So at worst, they'll eventually, I feel, be found. And if you miss something in a certain period, it'll get made up in a future period through the result of either a new licensing deal or a lawsuit or something along those lines. But that's pretty much what I just mentioned. That's the music business.
Yeah.
That's just what they do. So that's how I would answer that one as well.
So, but I just want to mention this ASCAP thing, because I think it's important. So ASCAP, a couple of weeks ago, announced that they would be delaying payments to songwriters by 3 weeks. Now, as far as I know, this is unprecedented. It's never happened before. They did assure all their songwriters that the payment would be the same as the same distribution that they expected to make, but they did delay it for 3 weeks. Again, as far as I know, there's never been any interruption or delay or anything of any kind. So, but this is something that did happen recently.
Right. And what they did was basically, and here's what happens going forward too, right? I don't want to get too much into the weeds on this one, just due for time, but basically the way that ASCAP collects and distributes revenue is a little bit different. Essentially, if they're paying, and I might have the dates wrong, but like if they're paying for third quarter of last year, they're using revenues collected in the second quarter of this year to pay for the third quarter of last year. So rather than collecting the revenues, holding it, accounting for it, and then paying out based on what they collected, which takes, however long that takes, they're basically paying out a prior period using revenues collected in a current period. And what's happened is that because the current period might be disrupted due to people that are, entities that owe ASCAP for funds are unable to pay or anything like that, they held off to ensure that they're collecting what they need to pay out for that prior period. And then going forward, what they've done is said, rather than setting a date, you're getting paid on this date on this month, they've basically moved that to more of a monthly distribution. So you'll be getting paid in August rather than on August 15th, that sort of thing. And that's sort of how they've moved forward to kind of adjust for all of this. And that's the latest that I have on that.
But literally, this is the only disruption of any kind we've seen in the history of these organizations. I mean, certainly as far as we're aware of.
Sure. And then just one quick question on the security of payments that came in via chat. Some write, how do we know the royalties will have 100% flow through? Sometimes writers or artists may have advances that need to be recouped, or the writer may go to a publisher and ask for additional advances and whatnot. Is there a control for that?
Yeah.
And I think there is.
Yeah, again, this is our account management team. They do a great job. They have close working relationships with all of these organizations, and we check all of that. If they have an advance, or even if there are expenses that are coming up that need to be recouped, that sort of thing. So our due diligence process makes sure that's all taken care of. And when the auction's sold, if it goes to auction or to any of our markets, that has all been taken care of. So the investor is in fact collecting 100% of it.
Okay. And going forward, any deals that are made are made outside of the ownership share that they've already given up through a sale.
Correct.
Okay. So we got a lot of questions about the secondary market, which I'm really excited about because it's a newer thing and I like to see people paying attention. So the first question is, are the sellers on the secondary market mainly flips?
So I think that's a little bit hard to answer just because one of the function of our secondary market is, as someone that owns an asset that's posted on the secondary market, you can sit back and just receive offers all day long and take whatever is attractive to you or to not take it. I do think there are a lot of investors, though, that have owned the royalties for quite a bit. They've collected a year, 2 years of royalties. And at this point, they're like, you know what, someone gives them a great offer. They take that offer and then they reinvest it.
I think, Matt, you had a great way of explaining this with owning a home.
Yeah, I don't remember the specific metaphor I used with you last time on that.
Sure, I'll bring it. It's like you have a house, you go to Zillow every now and then, and you'll check out to see what it's worth. And if someone were to offer you enough money for your house, you're not planning on selling. But if someone made you a crazy offer, yeah, you might consider it, right? And that's sort of how the secondary market works. Basically, you own it. If you want to flip it, you have the opportunity to present that and present a price that you'll take for it, or you just not and just say no to everything that comes in until something that comes in that's so great that you can't say no. And that's sort of the opportunity.
Right. And then the important thing from our point of view is making sure that if you buy one of these assets, that you have access to liquidity. And you might, when you buy something, you might imagine you're going to own it forever, but obviously personal circumstances change and preferences might change. And you might, you need to be able to have access to liquidity. The secondary market gives you that. Some people, are more, some people might be more short-term focused and might buy stuff and flip it, 30 or 60 or 90 days later.
Sure.
But a lot of the assets that actually sell have been held for, between, over 9 months. I think the average is certainly over 9 months.
So this is another question. This is great. If I own a life of rights royalty stream that I bought via royalty exchange, can I split that in a sense where I could then sell a 10-year term on the secondary market, but then keep the asset after the term's over?
No, we don't do that. We don't do that. And the reason we don't do that simply because, it can get, basically we want to keep the title of the assets that essentially originate on our platform in whole as they might transact in the future on the platform. It can get very, very complicated if you allow a lot of financial engineering essentially around these assets. They're not that big for the most part. The average asset is, $60,000, something like that. And so it's very difficult for us in terms of the time and effort in order to be able to slice things up a certain way to be able to try and optimize them for an individual's return. So no, they go, and I'm not saying we've never done it before, but as a standard practice, we definitely do not do it. And I'm against it. Honestly, I just think it's a mistake.
Okay, fair enough. Let's see here. So there's actually two questions along that same line. So I think that covers both of them. Can we explain this a little bit? There's just some questions around terms, basically. So how does the life of term pay out and how often? And then the other question is just flips over, after a 10-year term is over, does the original buyer buy back the royalties or do they just take it back? So just maybe quickly on those two areas.
Great questions. Typically, as I mentioned earlier, most of these royalties pay out on a quarterly basis. The entity, whether it be a publisher or ASCAP or BMI, they collect the royalties and they distribute them most often quarterly. Most of the transactions are quarterly. There are some that are twice a year. So whether you're buying a life of rights or you're buying a 10-year term, that payment schedule is essentially the same. Now, in terms of life of rights, the way they work in copyright law for things that published after 1978, you have it for life of the last living author plus 70 years. So it's a pretty long time. Most of the rights that we sell on the platform is from a living, one of the living creators, essentially. One of the creators is still living. I think only a couple instances where it's just the heirs who are now making it available. So virtually everything has at least 70 years. That's a life of rights deal. Now, in terms of the way a 10-year term works, after 10, you are buying the right to earn the income from that asset over 10 years. At the conclusion of that 10-year period, the income gets redirected back to the original seller. It's not a bond that has where the coupon, which then you are paying you have to pay back the original amount at the point when the bond comes due. It's not like that. It's you're earning the claim on that income for that 10-year period.
So in other words, after 10 years, you just stop collecting royalties and the seller regains the royalties that were going to you. It's automatic. You don't have to do anything.
Mm-hmm. Right.
All right. Here's a real fun question. Could you talk about the standing orders, right? Specifically, why do some orders have smaller amounts below the price? For example, one particular life of rights asset is listed as 57,000 and change, but below that is in a lighter font, it says 10,000. Why?
So,
and I think that means minimum fill is what I think that.
I think it sounds like you're describing the secondary market, actually, not standing orders.
Okay.
Oh wait,
I'm not sure. Tom, if you want to raise your hand, I can maybe let you ask the question more specifically if you're still on the call here. Tom DiCarlo, yeah, he's talking about standing orders. I don't think he wants to raise his
Yeah,
hand
I
to talk.
think,
So I think he's talking about minimum fill.
yeah.
Right. That's what it is. So basically that's their total order amount. Let's say like I'm willing to buy $100,000 of music royalties that meet my quantified standards. So in the order. And then the smaller amount is, but I don't want any catalog that is less than $10,000 in, so I don't want to buy $25,000 catalogs. I don't want any more than 10 catalogs in total to make up my total $100,000 order. So I'm putting the minimum fill amount at 10,000. Does that make sense?
I hope that answers your question. If not, please. He's good.
All right.
All right.
Awesome.
Thank you. Good question.
Great question.
All right. Let's see here. Lots of other questions here. As catalogs get resold over time, is it true that the value would necessarily decline, or is it possible for the value to increase? Do we have data on the price histories of catalogs?
We don't have much data on the price histories, but you can see actually catalogs that have transacted before in the secondary market. You can see the original sale and you can see what they're listing it for now. You can see the bidding history on those. We just don't have enough, I think, to say what the actual, what the offer amounts might be related to that. But we definitely have seen lots of catalog income grow over that time period. And you would think, especially if it's a life of rights transaction, then and the income has grown over the last 12 months versus the prior 12 months, then that asset should have gone up in value. And certainly a number of investors have sold catalogs for more than they bought them for.
Yeah, and just general rule of thumb on a 10-year though, yeah, you're absolutely correct. That's going to the price is going to go down just based on time value of money and whatnot.
Exactly. And also just remember that when you are selling a catalog, your return is based not just on what you bought it and sold it for, but what you collected for the asset along the way. That's also something to account for. What is the current liquidity of royalties? What does investor sentiment on royalties look like?
I mean, I'm not sure if I have a quantifiable way to address that. Ryan, what do you think?
So if we're talking about the marketplace, I was actually just looking at these stats a couple of days ago. We haven't seen a real change in bidder activities per auctions or amount of bids per auction or even kind of amount of listings per auction. So I'd say if we're talking pre and post Corona, there hasn't been much change, I want to say.
Yeah, I would expect there to be over time, though. I mean, I would just expect that it's going to have some effect, but it's not been anything obvious yet.
Right. Part of it is just because so much of it also varies from asset to asset, and it's very, very, very difficult to compare. Like we had 5 assets last week and we had 5 assets this week, and we saw bidding activity change from this to this. It's really hard to say this bidding activity changed as a result of investor sentiment or the global pandemic area, whatnot, versus these assets
having it be
those
Rihanna's
assets.
music or something.
You know what I'm saying? Like it's really like we're trying, but it's very, very, very difficult to really kind of draw those conclusions. Let's see here. Are we seeing more distress from artists in the current market? I think we addressed that by saying yes, we definitely are. Let's see. This is a good one. Do you allow officers or employees of the company to bid on auctions? And if so, why do you not call them out as a bidder?
You mean us?
Us. Royalty Exchange.
Not.
Just to clarify, and I don't know if this has changed because I had a hiatus for a while, then maybe policies changed. But at one point, I think the policy was that it was okay to place an opening bid. If there is no other bid, you can place an opening bid. But if any other investor then counter bids, you cannot bid against the other investor.
Yeah, I mean, there was one time where this is one auction where nobody was placing an opening bid on an auction, and Ryan came to me and he goes, "I don't get it. Like, this is a great asset. Like, what is wrong with these people?" And so I said, okay, well, I mean, what you're saying makes sense. So how about this? I'll place personally the opening bid, but if there's any other bid after that, just to give it some momentum, get the auction started. But after that, if there's not, there wouldn't be no subsequent bids that occur. So that is the one time. So we technically have a policy based upon that one time occurrence, but literally it's only happened one time. Subsequently, I relisted that auction, for the exact price I paid for it and after explaining to people my
Why?
thinking,
Yeah.
Ryan's rationale why he thought they missed it, it had a number of bidders, and it was
Right.
a successful auction. But otherwise, there's zero competition that happens with any of the investors on the platform. We feel like that would violate the kind of the core trust of what we do. So it just doesn't happen. If it ever did happen, it would absolutely be disclosed. But I
Right.
don't see any reason why it ever would.
And then one time that you did relist it, I mean, there's a dedicated email just to that particular auction.
Explain.
And I believe there was also a webinar that we had separately that
That's
included it quite a bit as well. So it was, I think, pretty.
And I made not a penny on it. That was part of it, like not a penny. And I could have, because it went for a lot more, but I made not a penny.
Right. Can you explain why filled orders still show up under the secondary market listings? I asked that exact question myself a month ago, so I know.
Yeah, the reason it is kind of they get in the way, and you could filter it out of your view, but the reason for it is to give you information on stuff that's happened in the past. So if you're trying to get back to one of the early questions we had, if you're trying to get a sense of like how the market works, and you're just considering investing in royalties for the first time, we want you to have that, concluded transaction information, so that you can assess, how you might value these things on your own. So we feel like having that information is important. Maybe we could, have the user interface organized a little bit better so that it's a little easier for you to filter out information you don't really need to see.
Yeah, and just think about it like if you were selling a house, right? You check the houses in your neighborhood or in your district to see what kind of price, even though they're not the exact same asset, right? You kind of want to see what they went for. So like, hey, this dollar age is 9, and it's got 50% streaming. This one's very similar. What did that go for? Something like that.
Okay. Another quick question, and I'm gonna have to do some interpretation around this one. The question literally is, how should I assess sound recordings versus music royalties when investing? Or do I approach them the same way? I'm gonna interpret that as meaning sound recording royalties versus maybe the publishing royalties, because they're all music royalties. But let's use that as interpretation. And if I'm wrong, please chime in. Question.
Well, I would say that there's historically, publishing was valued more than sound recording was. And it was for one classic reason, is that an original composition of music can be re-recorded by subsequent artists in covers and be even more popular perhaps than the original recording of that composition. So if you owned the composition, and one of my favorites is 9 Inch Nails had a song called Hurt that was pretty popular, but and I believe Trent Reznor, who was the 9 Inch Nails guy, was the one that was the main writer on it. Later he wasn't. Okay, so I don't know that part. So but the original writer on it.
Oh well, he was. Yeah, sorry. Yeah.
Okay. Good. Okay. So but Trent Reznor, was one of the writers, recorded it. It was a very successful song for them. But I don't know, 15 years later, something like that, it was redone by Johnny Cash, and that song was extremely popular. I think it probably has more streams, earned more money, than the original version of it did. And Trent Reznor, owning the composition of it, got paid off of the success of Johnny Cash's recording of it. So because of its long-term potential reuse, the publishing has traditionally been valued higher. Now, in the streaming world, the income earned certainly on the sound recording side is much higher. It's much higher than it is for the publishing. So I think that there's been a interest, and also because of the availability of all back catalog music through streaming. The original recordings have a longer lifespan than they would have had if you would had to buy the title in a Tower Records or something. So, music that you just couldn't have access to the sound recording of because it just is not available in retail stores is available. And that adds more life to the sound recording. So we have seen overall those prices come much closer together than they have historically, the publishing and the sound recording side of it. The most important thing I look at as an investor is I'm just looking at whatever its historical earnings were. And I'm trying to then extrapolate those earnings forward. So even though sound recording might earn a larger portion of the overall income generated for that song, than the composition would, it doesn't really matter the percentages as long as I'm just looking at how, how the composition side has earned over the last 5 years, and then just trying to extrapolate forward how it's likely to earn in the future.
All
So
right.
I think you can look at them mostly the same these days, honestly. The dollar age, I think, is the key thing.
Sure. I'm going to ask a couple of quick logistical, tactical, hopefully short answer questions, and then we got some longer ones here to close. So what is the length of the admin contract with Royalty Exchange?
I actually don't know. I'm not sure what the length of that is. I need to have my lawyer on the call for those. Rob would know.
We could follow up if you're on the
Yeah.
call. You need to let us know. I could go back into the questions to find out. How do you buy royalties for songs that are completely alternative or up and coming artists that cost very little? I think this might be more focused on the fact that we don't really work with newly or yet to be released music that's speculative, more music that's been released and has a history of earnings.
Yeah, there's a big opportunity, perhaps, I think, in being able and speculating in artists early in their career before they've really made it. But the part of the market that we focus on is artists who have artists and works that have a track record of income. So the investor you don't have to be an A&R, whiz kid to be able to understand how these things are going to succeed in the future.
Right.
You can extrapolate from past earnings. So that's the part we focus on. Not to say that the part doesn't have value, but that's not what you typically find on Royalty Exchange.
Yeah, I mean, and you will find stuff that is below 2 years old on Royalty Exchange. So if you wish to choose to speculate in that kind of area, there's certainly opportunities to do so, but it's a lot more risky. So just keep that in mind.
Right. Another question, and I'm just going to grab this one. How are you getting royalties to us on a timely basis? We've basically shortened our turnaround time to administer payment that we receive to you from 30 days to a goal of 15. And I think the last time we did it under 10 days. So we're speeding up that process. If I interpreted that question correctly. What options do I have in regard to buying royalties that pay in foreign currency? I have no idea.
So I can kind of jump on this. I mean, we have plenty of distributors that pay in foreign currencies, but we're going to receive it in US dollars. So for example, PRS is the UK PRO. And so they will pay us in pounds, and then it'll get, switched over to US dollars and paid out to the investor as US dollars. So there is an opportunity. You will always receive it in US dollars though, but I'm assuming the question is getting at speculating in currencies a little bit. There are certain organizations that do pay in foreign currencies.
Yeah, for the most part though, most of the deals that again are on our platform are all ones that actually pay in USD anyway. There's just this couple of outliers that we've had, like PRS on occasion.
All right, there's a question here that I'm going to read, but I'm just going to say in advance that we're not going to answer, which is, would it make sense to take out a home equity line of credit or to purchase royalties, and then on and on and on? And that's just not something we can get into. Okay.
Personally, I don't think it's a good idea to use debt for
anything.
I don't like debt. So
I know.
I would definitely advise against that.
But yeah, but that's not really our area, basically, our lane.
I'm saying personally, I think it's a mistake. Don't do it.
Right, yeah. So this is actually a good question here, and Ryan and I have this debate quite a bit. Why are some assets listed as featured listings? In my mind, to be featured, one prerequisite should be a buy it now price. Most featured listings don't actually have a list price. So Ryan, this is something that's rather new that we've started doing, which is, featuring the listings in the secondary market to highlight certain things. I know that I'm going to just take a stab at it because we've talked about this, Ryan. It's kind of a blend, right? It's a blend of a good asset that has shown meaningful returns since it's been acquired on our platform. If there is one that has a list price or a buy it now price, that certainly adds to the sort of the weighted consideration as to what makes it featured. And I think there might have been a third. I'm not sure. Those are the two big ones. Mm-hmm. And so Ryan, do you want to, because you actually are the one who sort of helps us determine what our features are.
So that featured listing section is currently systematic, and essentially what it is, it's just the highest returning assets for the investor. And the thought behind that is that they would be the most likely to sell. Now, Anthony, you send out a weekly market update email so I'll go through that secondary market and I'll pick what I see as 3 of the top assets to put in that email on the secondary market. And those, I try to choose the best of the best. So dollar age is at 5 or above. Streaming's making up 30% or more of the earnings, and the royalty stream has been growing over the last 3 years, over the last 2 years if I'm unable to find something like that. So that's kind of how that's chosen. But the featured asset section is based on that return to the investor at the current time being. And again, that's just they may be more motivated to sell.
There you go. And then I think I've got through all the questions we had in advance. We have 2 more, actually just 1 more coming up now. And then I think I'll make this the last question. So is the last question here is the title to the asset transferred to the buyer, or is it held in the name of Royalty Exchange as a custodian?
Well, the contract actually for the purchase agreement is held or is executed between the buyer and the seller. So the title to the asset is between the 2 of you. Now we act as a intermediary for collecting and distributing the royalties, but the ownership of the asset is by the purchasing party.
Right. So we're the administrator of the funds, but we are not listed as an owner of the asset itself.
Exactly.
Is that correct? Okay, great. Yep. Well, those were all the questions. We're pretty much just a little bit over time.
Wait,
I think
there's one more question. What would happen if we weren't around? I want to say, actually, that's a great one. I'm glad you brought it up.
Where did it pop up? Oh, it just popped up.
Richard. So Richard, what happens is that you have the right to move to a different administrator or eliminate us altogether from the middle of that process. So if we just disappeared from business, then you still have claim on that royalty stream, and it can be, you can either name another party to collect it on your behalf and forward the payment to you, or you could take that first spot. So there's not really, within our administration contract, it's not a problem for that to happen at all.
Okay, and Richard just keeps on asking questions on about the same part. Are there other parties who do that?
They do it, but they do it for a fee. Nobody does it for free except us. But again, you could get it transferred directly to you, especially in the event that we were not, able to provide this service to you, and you could collect the payments directly.
All right, and I'm asking that there's one question that came in on chat that I do want to address because it's an immediate answer. They're asking if there's a Zoom conference like this for artists, songwriters, and publishers. And as a matter of fact, there is, and it's happening today at 4:00 Mountain Time. And if you send an email to press@royaltyexchange.com, I will get you that information, and you can log into that one later today. And we will be having other similar ones as well than the one that we're doing today. So with that, I want to thank you all. We are doing these weekly for the time being. You're more than welcome to register for a future office hours event in coming weeks. They're always in the same time, Tuesdays at 11 o'clock Eastern, 9 o'clock Mountain. Thank you very much. We look forward to answering all your questions soon. And thanks again. All right.
And next time, let's have Rob on the next one.
Yes. Oh, excellent idea. We'll have our lawyer on the next one.
Yes.
All right. Great.
Thank you,
Bye,
guys.
Thank you.
Thanks.